This analysis looks at one simple question. After years of extraordinary performance, have semiconductor leaders moved from market leadership into late-cycle fragility? The focus is on three names: K, LA, Micron, and Lam Research. This material is for informational purposes only. It does not constitute investment advice, an offer, or a solicitation. We start with the simplest test. Before using any model, we ask how far these stocks have moved away from their own long-term path. This chart shows 40 years of price history for the three companies. On a log scale, a stable growth path should look broadly like a straight line, but the recent part of the chart bends sharply upward. That matters because it suggests that prices are no longer just compounding. They are accelerating beyond their own long-term trend. This is the first warning sign. To make the signal measurable, we compare each stock with its own 40-year trend. The gray area shows the dot-com peak. For many years, that was the reference point for extreme overextension. Today, all three names are above that level. In other words, relative to their own history, KLA, Micron, and Lam Research are now more stretched than they were in 2000. This does not predict an immediate correction, but it does tell us that the cushion is thin. The same message appears when we standardize the data. At the dot-com peak, these stocks were roughly 2.5 to almost 3 standard deviations above their historical trend. Today, they are closer to 3 to 3.3 standard deviations. That makes the comparison cleaner. This is not just about prices being higher. It is about the current move being unusually stretched, even by each company's own long-term standards. The second step is more formal. We now use a model designed to identify faster-than-exponential price regimes. The Johansen-Ledois-Sornette log periodic power law model, or LPPLS. The LPPLS model does not simply ask whether prices have gone up quickly. It looks for a more specific pattern: faster than exponential growth combined with increasingly compressed market movements. That structure is often associated with late-stage bubble dynamics. When applied to the 2020 to 2026 run-up, the model fits all three names closely. The key point is simple. The model is not just detecting a strong trend, it is detecting the shape of a late-stage acceleration. The model then estimates what it calls the critical time. This should not be interpreted as a crash date. It is better understood as the point where the prior acceleration becomes unstable. Across the three names, that critical time clusters around late June 2026, essentially the current data edge. As so, the message is not that a crash must happen now. The message is that the easy cushion from the previous acceleration has already been used. The confidence bands add an important nuance. Micron's timing signal is very tight, with a window of only a few days. Lam Research is less precise, with a window extending into autumn 2026. KLA is much wider, with a band of around 13 months, so we should not treat all three names in the same way. The group looks late cycle, but the precision of the signal differs by stock. The final question is how to read the signal. What does it say? And what does it not say? Two independent methods point in the same direction. The trend analysis says the semi-cap complex is at a 40-year extreme. The LPPLS model says the recent run-up has the structure of a late-stage bubble, and the estimated critical time is already upon us. But the caveats are essential. This is not a forecast of a crash on a specific date. It is not a claim that AI demand is fake, and it does not deny that fundamentals may explain part of the move. The point is asymmetry. When expectations are this high, even a modest disappointment can have a large market impact. The semiconductor cycle may continue. AI infrastructure demand may remain strong, but the margin for error is thinnest where acceleration has been steepest. That is the fault line. This is not a countdown. It is a warning that the cushion is thin. This material is provided for informational purposes only and does not constitute investment advice, an offer, or a solicitation. For access to the full PDF analysis, please contact us via direct message.